Good day. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for the evening of January 15th, Thursday, 2026. Tomorrow we have another full trading day, but remember, stock traders, you have Martin Luther King Day off, so that's something to consider. I have a favor to ask of all. Tell me what you want me to add. Let's move around some of these things. Let's get some other coverage. But I work for you in this sense. So give me what the markets you want me to cover. Do me a favor. Don't give me penny stocks. I get people that do that. I'm not going to cover those. But I will work with you and try to do the best I can for most people. And you see that happening. So how you do that, you're watching me on YouTube, just write in there and let me know. Give me the symbol with it if you could too. All righty. So as we look at the markets, today we saw unemployment claims come out. They were good. They dropped, and so did the continuing claims. We're looking at the Philly Fed, and we're looking at the New York region. How are the regions doing? They picked up in business activity. That's a good sign. Mortgages hit a 3-year low today. They haven't cracked 6% yet. But they could, because remember, President Trump has ordered Fannie Mae and Freddie Mac to buy $200 billion in bonds with money that they made in past years, and they're doing that. They're driving the rate down. We're not seeing interest rates in the short term do too much one way or the other. Netflix is still in that battle to get a hold of Warner, and the markets don't seem to like that they're doing that. The fact that we saw mortgage rates slip helped Home Depot and Restoration Hardware. Let's see where we go with all this in terms of news for tomorrow. And tomorrow, what we're going to see is the Federal Reserve release their monthly industrial production and capacity utilization. At around 9 in the morning, we're going to get the National Association of Home Builders. And also saw today, and I said what we also saw, my voice might have cut off there. We saw a number of the Fed members come out, and they're not in favor of interest rate cuts at this point. In fact, if you look at the CME Fed Watch page, through the rest of the term for Fed Chair Powell, it doesn't look like the probabilities are there for another cut by the Fed. That'll be interesting as can be. What's really happening is the labor market is not falling apart. We saw that in the jobless claims. Inflation is stubbornly staying away from the 2% area. And Fed members as a group, other than Steve Moran, who is the one holdout, he always wants a big cut. But as the group will, I think what they're saying is they want to see the data flow come in that says inflation is finally buckling. And as long as labor is not falling apart, which it isn't, then and only then are they ready to cut rates and loosen the monetary policy. Goolsbee summed it up today well. I cover it in my newsletter tonight. So let's, if we could, take a look at some of the action that we're getting and where we're at. I've covered emerging markets with you because I thought the market was going to take off to the upside. I'm sure you're aware of that. And it has. This is a new high for the whole move. And as you can see, you've got the swing line making this beautiful pattern of higher highs and higher lows. In terms of moving averages, here's the 100. This is the 100. The 18 in the red, green's the 100, 200-day average. Bullish setup on everything. And the Bollinger Band's the next resistance area at 58.96 right now. In terms of momentum, it's as bullish as you get. You have the bullish embedded reading, you have the stochastics up, and the market looks like it wants to head higher. Gap has had a correction. It went back to its 18-day average. It found support today. One day doesn't prove anything, but the market's trying to find its legs, I think, down here. And in Lululemon, they gave back a lot from what went positive for them over the Christmas period, but they are down to the Bollinger Band. If the market's good, it's not going to accelerate from here. If it starts accelerating under the Bollinger Band, this whole area becomes a top, and then the market opens up the chance of back to the 183.60. It is approaching oversold territory, so that's the positive for it. FedEx has done very well in its turnaround. Look at how this market bottomed in October, came out of this narrow sideways action, and then that was your base, and the market's moved higher. Still looks to me like it's in a bull move. move. It tired a little bit the other day when it lost the bullish reading right here. It got it back. It caused a market bear trap. No, you need to close back over 80. Look on the left. 79.96 is not over 80. So I think this rally is going to peak here, and the odds favor. That's all I can tell you, that the market won't get back over 318.83 before we get a little bit of a correction. In Netflix, market is pushing itself down. Again, it had the bearish embedded reading. It lost it. You see that right there. So coming in, you were down 22.90, and then the market re-embedded. That's what's causing the lower low action right now. In Uber, not through. The market might want to correct even more and play at that 83.15, the 18-day average area. Rivian's had two big downgrades from different market analysts. It could be headed to the 1577 level, which is the 100-day average. But as I've said before, I think you have to have your foot in or toe in the water, because I think their new car's got a real big chance of being a super success. Joby, the market is holding on just like we saw in Uber and some of the others. They come down here, Nike especially did that, and they hold. They seem to bounce away. In XLF, I'm looking at the financial sector. It didn't want to continue on to the 100-day average, apparently, and you're getting a bounce. There's nothing bullish on the chart other than you're oversold. But otherwise, the pattern is still bearish. The industrial sector is still looking to me like it wants to move higher. It keeps hitting the Bollinger Band, moving to the right with an embedded reading. That is just super strong. Embedded is when the slow stochastic changes from overbought or oversold and locks in. And the longer it stays locked in, the more powerful the move becomes until the red line closes back under 79. Here, you've got an 80.3 reading in the slow stochastic, but a 76 on the other number. They both have to be doing that, just the way you're seeing in gold. It's trying to again embed right now. I'm not saying it'll happen. When it happens, it happens. We recognize it always. You want to play after it does it, not when it does it. Google. Here is a market that has got its embedded reading. It keeps coming up to the Bollinger Band. If the red line closes under 79, then you want to be out, because the market could retrace, in my opinion at least, to the 18-day average, the closest main moving average on that chart. Microsoft is in the toilet. It just can't get away from anything. Is this going to prove to be a big top area? All the sideways action gives a market power. And if it stays under like it is, I consider this now a breakout to the downside. You'll say why? Because you've had 2 days in a row where the market closed literally at the bottom of those trading ranges. In BND, higher highs, higher lows. The market X still bullish. It can pull back. It's overbought, and it should, and there should be profit taking. I told my subscribers that today, that I think the pros are coming out of the market. In the dollar index, this is a market that is overbought, but it's got momentum. And until it runs its course, it ain't done. Look at how it came from down here. How many people were bearish down here? And the market has come all the way back. Once those swing lines change, but I'll tell you what changed the whole story. Remember what I've just told you. If you get the embedded reading to lose, as a minimum, I look for the market to go to the closest moving average before it makes a new low. It got there, and it just kept building with itself. Now it's getting overbought. FXE, this is the short cover area. It's the exact opposite. You're at the embedded reading. You take some of the position, this is what I teach in my course, off, and I look for that on rallies to put it back out. So there's a lot to do, which we expected would happen early on in the year. One of the ways you can take advantage of this is going to our website, go for the free offers, give yourself a free trial to what I put out for you. You just click up here. You can also click over here or go to iraepstein.com and you'll see the free offers. I'm Ira. Have yourself a great day. Thanks for watching. Watch the other videos, and I'll catch up with you in the morning.